Good day friends, in today's lecture we will be discussing everything about withholding tax. This is Doc Nee at your service, making law easy to understand to evade stress and make life as comfortable as possible in understanding the law. An income tax subject to final tax wherein the payer of the income withholds the tax and remits it to the government as final settlement of the tax due on said income. In short, it refers to an income where the tax due is fully collected through withholding the tax system. The recipient in this case is not required anymore to include the said income subjected to final tax return. An example of income subject to final tax are interest from bank deposits, royalties, dividend income. The withholding agent of a non-resident foreign corporation is the one liable for any violation of the withholding tax law if there is any violation that is incurred. Hence the withholding agent should be entitled to claim the refund of excess withholding tax paid on the income of a non-resident foreign corporation. Any person required to withhold or who willfully fails to withhold shall, in addition to other penalties as provided, shall be liable upon conviction to a penalty equal to the amount of tax not withheld. In case of failure to withhold the tax or in the case of under-withholding, the deficiency shall be collected from the payer or withholding agent. Salaries of judges are not tax exempt. Its taxability is not contrary to Section 10 Article 7 of the Constitution, providing for the non-diminution of the salaries of members of the judiciary during their continuance in office. It has been decided by the Supreme Court that the clear intent of the Constitution is to subject their salaries to tax as in the case of all taxpayer. The deduction of withholding tax is not a diminution contemplated by the Constitution. Under the tax code, the earnings of banks from passive income are subject to 20% final withholding tax. This tax is withheld at source and is thus not actually and physically received by the banks, because it is paid directly to the government by the entities from which the banks derive the income. Apart from the 20% final withholding tax, banks are also subject to a 5% gross receipts tax, 5% which is composed by the tax code on their gross receipts, including the passive income. Since the 20% final withholding tax is constructively received by the banks and forms part of their gross receipts or earnings, it follows that it is subject to the 5% gross receipt tax. The final withholding agent is liable in the event that the final income tax cannot be paid by the taxpayer. Hence, in a claim for a tax credit erroneously paid by a withholding agent, the said withholding agent is a proper party. This would be all friends. Until then, please subscribe to the channel so that you will be notified every time new post is released. Thank you very much and God bless us all.